Did you know that there's a potential game changer currently happening in the political scene that could adversely affect your income? I'm talking about Joe Biden's 2024 tax proposal and his central campaign message, which, if implemented correctly, would raise the government's tax receipts by a whopping 4.951 trillion over the next 10 years. Whether or not Congress will pass them is anyone's best guess. However, we are in an election year, and most of the 2017 tax cuts President Trump's initiated are set to expire next year, which means we should definitely talk about this proposal now. So like the video, subscribe, and let's discuss Biden's new proposal and its potential impact on the economy. Let's start with a little political background. Earlier in March of this year, the Biden administration released what's known as the Green Book. This contains the administration's budget and tax proposals for the fiscal year of 2025. Now, if you pay close attention to Biden's State of the Union address, then his vision to increase the tax revenue is no surprise. In fact, the proposals in the Green Book are nothing new and have been proposed previously, so that's just what it is. That said, if the proposed tax hikes are implemented, they will not affect everyone, but the biggest burden would be on corporations, high income earners, and the wealthy. In fact, since coming into office, Biden has done everything possible to change the tax system so that, in his administration's own words, the wealthiest Americans and the largest corporations pay their fair share of taxes. That said, none of these proposals are law yet, as with any new law, they'll go through Congress, where each will be considered and accepted or rejected. What is for sure is that the politics of it won't be easy for the Biden administration. While the administration assures Americans that the tax hikes will not affect the lower and middle class citizens, that is, anyone earning under $400,000, they will have rubbed the other side of the divide, the Republicans, the wrong way. They say the proposals will hit families and American businesses hard, especially with inflation still relatively high. Republican Representative Jason Smith, who also serves as the chairman of the House Ways and Means Committee, said instead of allowing families hit by these high prices to keep more of their hard-earned money, President Biden wants to increase highest tax increase on families and small businesses in American history. But Biden has stood firm against this criticism, doubling down on criticism of President Trump's tax cuts by saying the tax cut is going to expire. If I'm reelected, it's going to stay expired. So it's highly unlikely his proposal will get any Republican votes. A few Democrats too may oppose the idea of coughing more in taxes. However, this is only speculation. We can only wait to see what Congress decides. Beyond the politics around this matter, we must ask this important question. For example, how does Biden's proposal address the current challenges we're facing as a country? One of the biggest economic challenges we have today is the high budget deficit and rising inequality. Our high budget deficit is largely due to tax cuts. When times are tough, the government usually gives tax breaks to cushion businesses and spur economic growth. However, due to the slowed economic activities synopsis, with such times, revenue usually dips, which means that the government has to borrow more to continue fulfilling its obligations. With time, this debt and consequently the interest payments balloon take more and more money from the budget every year. In the long term, a high deficit leads to lower national savings, lower domestic investments, and even more inflation. In 2024, the U.S. budget deficit is over 1.6 trillion. If Biden proposals become law, they could see the government raise trillions of dollars in taxes over the next 10 years, which would help offset this deficit. There's also the issue of inequality. The concentration of income and wealth among the top 10% of the country's earners has steadily increased, while the lower and middle classes have only seen a slight increase. In fact, the top 10% of wage earners saw their income soar by around 22% between 2019 and 2022, while the middle income earners experienced a mere 5% increase. The 2017 tax cuts, which gave corporations and the wealthy some tax relief, inadvertently increased the wealth gap. Consequently, Biden's administration has tabled the proposals as a solution for correcting these economic inequalities by eliminating the tax cuts for the rich. With that said, let's have a rundown of the key aspects of Biden's proposal and their potential impact. Their major groups will be significantly affected by the proposed tax hikes. First are corporations. Corporate tax will increase from the current 21% to 28%. While this isn't good news for anyone who owns a corporation, it's still not as high as before the tax cuts when it stood at 35%. Billion-dollar corporations will also be required to pay a minimum of 21% tax compared to the current 15% tax. In addition to this, C corporations will also say goodbye to the tax breaks for $1 million pay slips and above for their executives. So if you own a C Corp, you probably use compensation to offset some of your taxes. Basically, you can deduct the salaries and bonuses that you pay to your executives from your corporate tax returns. However, if Biden's proposal takes effect, substantially pay packages for executives that is anything over $1 million will no longer be deductible. The impact? Well, most companies won't be too enthusiastic about offering these massive pay packages, which may reduce the wage gap significantly. Also affecting large corporations will be an increase in the stock buyback excise tax from 1% to 4%. Basically, this is a tax that is a publicly traded corporation pays when buying back stocks from the market. The previously favorable buyback tax codes meant that many corporations would spend much of their profits on buybacks to increase income for shareholders. The proposal, therefore, is an attempt by the administration to encourage large corporations to invest in increasing innovation, employee productivity, and growth. But it doesn't stop there. Corporations that want to purchase jets will also not receive preferential tax treatment compared to those buying for commercial purposes. Elsewhere, oil and gas companies who have been enjoying federal subsidies won't be spared either, as the new proposal seeks to end the billions worth of subsidies the industry gets. The same goes for real estate investors who, thanks to a tax loophole, can defer paying taxes on profits made as long as they are reinvested back into the real estate. The second group that will be affected by this proposal is the high income earners. This is anyone earning over $400,000 a year. Remember, the 2017 pay cuts reduced the high income tax rate from 39.6% to 37%. Now, Biden is proposing to return the pre-2017 levels for single filers earning more than $400,000 and married couples $450,000 and filing jointly returns. So on top of this, the proposal imposes a 12.4% Social Security tax for this group of earners, which the employer and the employee will split equally. Currently, you only have to pay Social Security taxes on the first $168,600 of your income and zero on the rest. Medicare will also increase to 5% from the 3.8%. Also worth mentioning is that the itemized deduction will be capped at 28% of the value. And the third group that will be affected by this proposal is the ultra wealthy. Now, despite having the most money, wealthy people are notorious for evading high taxes without breaking the tax law. In fact, according to the 2021 White House report, the over 400 wealthy billionaire families in the country only pay 8.2% of income tax on average, compared to the 13.6 that the rest of the population pays. Now, fun fact, did you know that 18 billionaires received COVID-19 stimulus checks in 2021 because their taxable income was next to nothing? Back to the proposal. Biden's plan to enforce a 25% minimum income tax rate on anyone with a net worth of over $100 million. Moreover, those earning over $1 million in capital gains will pay 39% in tax rate rather than the current maximum capital gains tax rate of 20%. It continues, wealthy people will no longer be able to avoid capital gains taxes by passing on the gains to their heirs, a loophole many use to secure their wealth for generations. Any gains above $5 million for single filers or $10 million for joint filers passed down to their heirs will unfortunately be taxed. But the potential benefits to those earning below $400,000 might be the real game changer in 2024. Biden's proposal will not only spare the low and middle class earners from extra taxes, but also increase tax breaks. Among other things, he plans to increase the child tax credit to $3,600 for young kids and $3,000 for older ones, as well as make these credits permanent and fully refundable. He also proposes to make lower health premiums permanent and increase the earned income tax credit bracket for the working class. These policies could massively affect this popularity among the working class citizens in this poll. So, what can we expect if the proposal sails through? All in all, Biden's proposal is about closing the current tax loopholes that have seen lower income earners pay a higher tax rate than the highest earners. So we may see a reduced income disparity. However, we shouldn't expect this to solve the huge wealth inequality. Also, the extra revenue generated will help offset some of the benefits, which means the government will have more money to inject into development projects. However, some reports also suggest that the punitive tax hikes could reduce long-run GDP by 2.2%, the capital stock by 3.8%, and wages by 1.6%. So do you think Biden's proposal will positively or negatively affect the country? Drop your thoughts in the comment section, and if you want to connect with me on a deeper level, head over to my calendar and schedule a free tax analysis where we will dive into your previous tax returns and give you a game plan on how you can minimize your taxes this year in 2024. Until next time.